kind of give us a bit about your background and how you started ITE.
Great, great. So ITE stands for Industrial Transportation Equipment. And we focus on, as you highlighted, rail and a bunch of other big pieces of metal, intermodal, and other transportation assets. I grew up in Michigan, just outside of Detroit. Everybody I knew was more or less in the auto industry in some form. So I grew up with a natural affinity to big hunks of metal. So this feels like a natural transition. I spent about 10 years of my career doing distressed buyouts. And with distressed buyouts, there's a big focus on hard assets, core assets, and cash. And so, again, ITE started as a natural transition to that because we do focus on big, hard assets with a laser focus on cash flow. We started the firm because we saw a bunch of wonderful operating assets that institutional investors didn't have any real exposure to. And there's a lot of reasons for that, not least of which they're really hard. You need a big team to do it. So your investors and you have the opportunity to invest in equities for appreciation and credit for yield and private equity for multiple expansion with management help. But then there's this group of operating assets, railcars in particular, that are a little bit of everything. And they're operating assets, they're a portfolio of bond-like cash flow streams, and there's a huge data piece. So we launched ITE about 10 years ago with that mandate in mind, how to get investors institutional exposure to operating assets in a low volatile cash flow stream. Today, we manage a little bit under $3 billion of equity. We have about $5.5 billion worth of assets. So we do put leverage. We'll talk about that in a little bit. There's about 45 people within ITE, but we've got about 540 people within the ITE Rail Fund at the repair and maintenance facilities and our leasing platforms, really thinking about touching and working those assets every day. And it's created a great rail fund. We've got we've delivered to our investors a net 11% return over the past, on an annual basis, over the past 8-9 years.
That's great.